They've held, it's 3.75%, so not a surprise there. But this was, let's not forget, a moment when only kind of a couple of months ago, most economists thought the bank would be cutting interest rates at this point, if not having already cut interest rates down to 3.5%. So, it's worth just taking a step back and remembering how much things have changed. But I think the key thing to note, Gareth, here is obviously they've left interest rates on hold, 3.75%. I'm just getting through the vote split, because what happens here is that it's the Monetary Policy Committee. There's 9 members. Looking at the vote gives you a sense of where things may head in the future. And the vote split was 1 member did vote for a hike for interest rates to go up, and 8 voted to leave rates unchanged, which again is kind of in line with what economists were expecting. But as I say, the shift that we've seen just in recent weeks is kind of extraordinary, which you wouldn't guess from just looking at that chart, looking at the actual number, which is to say that the forces that we're seeing in terms of inflationary forces on petrol, on diesel, on jet fuel, on the other kind of things that are now in short supply from the Strait of Hormuz, mean that all of a sudden the most likely direction is not the next direction is not another cut, but a hike. We're just getting, actually, should I read it out? We've just got the quote from Andrew Bailey, the governor of the Bank of England, who says that the war in the Middle East is causing inflation to rise again this year. We've held bank rate unchanged at 3.75%. We think this is a reasonable place given the situation of the economy and the unpredictability of events in the Middle East. We'll continue to monitor the situation and its impact on the UK economy very closely. Whatever happens, our job is to make sure we get inflation back to the 2% target after the initial impact of the war on energy prices has passed. And that last line is quite interesting, because what that underlines is the Bank of England doesn't always have to keep inflation at 2% if it thinks there's going to be this hump in prices, which everyone is expecting now, 4%, maybe even higher inflation in the next, in the coming months as we see the impact going through. But the bank doesn't necessarily need to immediately react to that if it thinks inflation is coming down. So I don't think there's anything that's enormously surprising about this. The main question that we're going to be kind of trying to get the answer to, and Paul Kelso has been in the lock-in, so he'll very shortly have it to us, is what does this mean for the bank's forecast? What does it mean for its expectation for the UK economy? I'm assuming it cuts its growth forecast. I'm assuming it raises its inflation forecast quite significantly. That is what matters, I think, for households around the country. It's what does this mean? Having just gone through this cost of living crisis for the last few years, but barely feeling like we're out of it, now to see inflation at high levels as the bank is likely to forecast, that is something we're all going to be feeling and already starting to feel. Obviously, if you've filled up your petrol tank recently, you have felt that. So we're seeing, I think, not unexpected reaction from the Bank of England, but nonetheless, it is a significant moment, because right now, not long ago, people thought they would be cutting interest rates. And if you have a mortgage, obviously, this has a direct bearing, particularly if you have a floating rate mortgage. They've left them on hold. Most people think that the next move is likely to be an increase in interest rates. And with 8 of the members voting for a hold, but 1 of them voting for a hike, that's one of those little hints that I think economists always look towards in the Kremlinology of what is the bank likely to do next. The fact that not long ago there were members calling for a cut in interest rates and now they're calling for a hike, well, that is significant. So it is one of those moments that's not unexpected given what we've learned recently. But if you looked just only a few weeks ago and what economists were expecting, they would have mostly said that the bank was going to be cutting interest rates.